Good afternoon, everybody. It's Doc here from OnTheMoneyOptions.com. It's Friday. Pretty quiet day in the market. The volume on the S&P is only about 2/3 of what an average day is. So it's pretty quiet, but there is something going on here that I want to share with you, something maybe you've heard of and never seen in action. I'm going to show you one that's happening. This is called a short squeeze. We're looking at a 3D printing company, symbol DDD. And as you can see over here, we had DDD was trading nearly $100 one time in 2014, and then has since dropped to a low of about $4.85. Now this just didn't go down because the company wasn't good. This started going down and then picked up on a lot of the big institutional traders shorting the stock. And during this period of time right here, the short interest on the stock went way up. Now, short interest simply means that someone has borrowed the stock and they've sold it first. So, you know, the old adage of buy low and sell high, there's no law that says you can't sell high and then buy it back low. And this is typically how you see stocks reverse after a long period that's down. So you see here it bottomed in 2016. It's bumped around back and forth. And every time you see it get up higher, you see it come back down. And I'm going to show that to you in a minute, how they're trying to push it back down, shorten it. But here recently in the last few days, you can see, moving over here to the daily chart, you could see some rather large volume and the stock pricing moving up. This isn't companies that are buying stock because all of a sudden they think DDD is a good stock or 3D printing. They're buying their stock now to cover their short. They've shorted the stock at $70 and it's creeping back up close to $20, and they're afraid they're going to have that $50 profit vaporized, so they want to start to cover their stock by buying their short positions back to cover. There are 28.8% of the total shares outstanding on DDD are short right now. That means that, you know, close to a little more than a fourth of all the shares of Triple D are short. Somebody's got to buy them back. And when this starts to go back up, people who have short positions will start to lose money. So when they get nervous, they'll start to buy it back. This causes what's called a short squeeze. When everybody sort of gets the idea that it's time to jump in and get your profit, then the stock blows up in price. So I'm going to show you this happening here, and I'm going to back this up for just a little bit, and I'm going to show you what was going on earlier. This part of the chart right here is the same as this area here on the weekly chart. And you can see every time that it tried to make a little move up, there was a large red volume bar. That's this bar right here, and it drives the price down. That's the guys trying to short the stock and keep it pushed down to keep their profits in. You see later on here in September and October, it moved back up a little bit, and then they crushed it again. Now, we move back over to the March time frame, and you see the stock starting to move up a little bit. There have been some changes in the news and some changes in the marketplace that maybe have suggested this is about as low as it can go, and it's probably going to pick up and grow out of here. So you see this first large bar, green bar here. This is a lot of buying. This isn't just buying because it's a good stock. They're buying it in order to cover their price, their shortage stock, and make the most profit. The first guy to short and the first guy to get out make the most money. Once the big institutions start getting out, then it's almost a feeding frenzy where everybody's worried that their profits are going to disappear and they start to buy their stock in. So I'm going to move this up just a little bit so it makes it a little larger for you to see. You can see here recently on an average daily volume, I believe, of about 2.44 million shares. This day, which was May 8th, we had over 17 million shares. And then it's began to creep up. And you can see, looking at the different color bars here, there's generally more green days than red days, meaning that the volume was on a price that moved up, makes it green. Then you see here in the last few days, there was an attempt to try to drive the price back down. And this basically failed, and it failed at the 200-day moving average, which is this purple line here. And then all of a sudden you begin to see big volume come in. This volume 3 days ago was over 18 million shares. Now on 2.4 million shares average daily volume, we're looking at 9 times that average daily volume. That will get your attention. We followed it up by another day with 7.5 million shares, and today so far we're at 5.75 million shares. And you see that the price of the stock is very near to the top of this bar here, which suggests that it's trading very near its high today. So this is a short squeeze that looks to be happening. I would expect that if any kind of news comes out that makes the big institutional traders think that Triple D is going to move up some more, you're going to see some massive short covering, and you're probably going to see this stock pop up maybe up into the $30 to $33 range. Not because all of a sudden it's a great stock, but because all of the big institution guys are going to cover their short positions to try to maximize their profits on their short. This is typically how stocks turn around in a bullish move. The bottoms of stock are always sort of V-shaped, and that's because they're shorted down to this point where they don't think can be shorted anymore, and then everybody's trying to cover as fast as they can to maximize their profit. Now what I want to do is I want to show you how I traded this position when I saw that happen 3 days ago with 9 times the volume. We bought the January 2020, that's a leap, that's a very long-term option, at the $20 level, paid $1.35 for it. You can see right now it's worth $1,568, and the price of the stock is not even up to $20 a share yet. On the second day, when I saw another day of large volume, I went into a shorter time frame. I bought a November 19 call, which gives me the right to buy it at $19 a share, and you can see that it has moved up also. So all in all, in the last 3 days on this position, this is up $1,714. If the squeeze looks like it's going to continue, I may even buy more options, maybe $20 options, maybe $21 options in the November, December, and try to ride this short squeeze up. So this is called a short squeeze. This stock is 3D printing, or DDD, and you get to see actually this happening in real time. And we'll see how it closes today. Maybe we'll give it another update. So anyway, hope you enjoyed this. Like my videos, like my channel, subscribe to it, and don't miss another one. So until next time, this is Doc saying so long and stay hedged.